Hi there, eToro, and happy Friday. I'm doing my weekly review today instead of Monday because I've got meetings on Monday, but also it is the 4th of July on Sunday and the US will be closed for business. So let's take a look at what's moved the markets this week. All right, beginning at the start, let's take a look at that. So I don't look at shorter time frames. For those of you that have been following me for some time, you know that my tendency is to buy and hold things for the long term. So looking at the 1 year view, we can see that the S&P 500 since the end of June, early July, has given a return of 39%, nearly 40, and my portfolio has given a return of 59%, nearly 60. All right, I'm not putting up my longer term returns, but I think as of yesterday, my returns for the 6 years that I've been on eToro sit now at 660% or more. So investing for the long term is definitely my preferred approach. Communist Party has just turned 100. This happened on the 1st of July. And this had me quite nervous. And I think it had the rest of the market a bit nervous. And if you read through the headlines, I encourage you can just search for this topic in the South China Morning Post. You can see that there is a lot of chest banging going on about how the current political party is going to, make a better country. But there are also just a few cringe-worthy bits and pieces, which I was quite nervous about. And the US listed Chinese stocks have hurt over the past day or so, and I'm wondering if some of these headlines have shaken the market sentiment just a little bit. So things like the president saying that China has never bullied, oppressed, or enslaved people of other countries. Foreign powers will have their heads cracked and bleeding. He vows to crush attempts to thwart the complete reunification of Taiwan. So I don't know if you know about this ongoing political issue where China considers Taiwan part of China, etc., etc. So this has happened. The markets were all open, but I think that some of the things that have been said may have hurt US listed Chinese stocks, at least yesterday. The other big thing that's happened is that the US is now one step closer to its infrastructure bill being passed. So it has to go through several layers of approvals through the political system in the US. So it's not yet completely approved, but it is through one of the major hurdles. So this investment bill, which originally was a lot bigger, but I think they always start with a much bigger number than the number they intend to finish with, covers topics such as infrastructure, including EV charging, passenger rail, transportation, water, wastewater, that kind of thing. So this will be good once it passes because it'll create lots of jobs in the US, but there'll also be a certain number of companies that'll be massive beneficiaries of this bill. Something that I did not expect to happen this quickly is that the US has now got 130 countries to agree to the 15% global minimum tax for companies. I can't believe that this has reached this level of agreement so fast. It's mind-blowing. And so there are 130 countries, including China, which is very interesting, and India. So this is far from done. There are some countries that are holding out. I'm not sure how this will be taken forward, but those 130 countries account for 90% of the world's GDP. So they don't need all of the world's countries to agree. They just need enough of them. And I don't know if this news has potentially hurt some of the bigger global technology businesses yesterday. So yesterday, S&P 500 did quite well. Tech, and then all the NASDAQ, which isn't entirely tech, but is largely tech, did less well. So there are always ways around these things. and also we don't know the details of how it might be implemented. So there'll be some kind of a sharing agreement between countries on how to pick up the tax that has been, the global minimum tax has been charged on these companies. So it's great. I think it's fair that these huge companies they've been dodging their taxes for a long time. But will they just find a way to wiggle out of it? I'm not sure. Time will tell. The Delta variant is spreading, and I mean, as we know, having been in a pandemic for so long now, the virus spreads quickly, and this is a mutation that spreads faster than most. So I think weeks ago, one of the world's leading most experts says the Delta variant is obviously going to become the dominant variant globally. The media is now coming around to that opinion too. So new COVID wave inevitable in Europe as cases rise. So I'm not going to go through all the charts. I think everyone's sick of seeing those charts, but I did want to just point it out. So in Europe, cases are rising. The US is optimistic about a return to normal, but also at the same time, the Delta variant is spreading there. The ray of hope, though. So all eyes are on the UK at the moment globally, because the UK managed to vaccinate a very large portion of its population very quickly, and the Delta variant is the dominant variant here and has been for a while. So we're ahead of at least some of the pack, most of the pack, at least in the Western world. And we can see, for example, that the case numbers are up 71% in the last 7 days. Huge increase. I mean, I know I was going to show charts, but this is, I want to tell a positive story using these charts. So cases up massively. There is a lag between cases, hospitalizations, and deaths, but the Delta variant has been dominant in the UK for long enough now that its effect in hospitalizations and deaths would be apparent. And what we can see is that despite cases being up, so we should also note that the UK is more opened up than it was before, so the virus can spread more. We can see that despite this enormous increase, there has been an increase in deaths. There has been an increase in hospitalizations, but the numbers are much smaller than the number of people that are testing positive. So it's not conclusive yet. We still need to, we don't know if the lag is fully accounted for in the data that we're seeing in these two categories. I really hope it is, because it's not just the UK, it wouldn't just be good news for the UK, it would be good news for the world. So once again, keeping an eye on it. The media, don't just read the media's headlines, read the details in the articles, because quite often the headlines are clickbait, and there might be details in the article that I find quite often actually say that it's not as bad as those headlines make it out to be. One area of the world that I'm watching quite closely, I mean, I am African, but also just because the case numbers in Africa are rising quite fast, and particularly in South Africa. So you can see darker is worse. And there's one standout country in the whole of Africa, which is my home country. So the virus is spreading very fast there. The good news is that the average age in South Africa, I think, is around 27. So a young country will see less of an effect. But I know that there are still big lockdowns going on. My home country is very locked down right now, which hurts the economy. And because they're a poorer country, poorer countries can't weather those type of economic impacts as well as wealthier countries can. So UK recovery stocks, they were looking fantastic. And then once it became apparent that the Delta variant was spreading rapidly through Europe, UK stocks took a bit of a knock. So you can see EasyJet here and Rolls Royce, the engine maker or engineering company, but largely an engine maker for planes. These numbers have recovered quite a lot actually in the past few days. There's been a strong rebound because we're fast approaching the 19th of July, and the country and the market is anticipating that we will fully reopen because the government has said they will do that. That remains to be seen. So despite the rebound of travel stocks over the past 2 days, you can see that UK travel stocks have been quite hard hit. Be careful with recovery stocks. Almost all recovery stocks are carrying a lot of debt right now, and I've got a feeling that many companies will default over the next year or two. You want to be buying the companies, for one reason or another, are in a very strong position to weather those kinds of things. Some very good news. So there's been a major development in the gene editing arena this week, CRISPR specifically. So CRISPR is a particular technology that allows your genes to be edited. Phenomenal technology that's come a long way in a short amount of time. And this result, the test that was being conducted, was effectively the first CRISPR test inside a human. So CRISPR technologies, whilst very promising, are seen as risky, obviously, because they can edit your genes, and the editing that they do to your genes cannot be reversed. It's a one-time thing that happens, and that's that. So for a long time now, the technology has been used in a very restricted way and not really inside of humans. It's been used in other kinds of creatures and plants, etc. And now, for the first time, we're seeing the results of a human trial and the results have surpassed their expectations. So this is good from a scientific perspective, but also from a PR perspective. So whenever these types of large changes become available in our society, there's often a lot of fear. So, I mean, autonomous vehicles, it's got nothing to do with biology, but autonomous vehicles, people are very afraid that, they're going to crash and kill everyone all the time, despite evidence showing that autonomous vehicles tend to have far fewer crashes than people do. And the perception can massively hamper the adoption of the technology. Society, despite all of the evidence, can stop technology being used in a meaningful way. So this is a great step in terms of the science, but hopefully it also means that the positive PR around this will mean that society is more accepting of the technology. And it opens up so many things. Gene editing could eventually eradicate all life-threatening genetic-based diseases, which is amazing, and could even make us superhumans one day. But that's far further off. I wanted to touch on this quickly. So this is very interesting. Instagram has more or less come out and said, listen, we are losing to Facebook and YouTube, and video is obviously where the market is going. Photos are great, videos are better. The growth of TikTok, I don't have the numbers with me, but the growth of TikTok massively has outstripped just about every other social network that exists. So Facebook is trying a number of different things at the moment because they're rapidly reaching saturation point for the number of people in the world that they're going to be able to have adopt their products. So they need to find new ways to squeeze a little bit more money out of those people. So I'll be watching this one closely. It's not the only thing that Facebook is trying, but Instagram is a big money maker for them. And if Instagram were to be eclipsed, if people left Instagram for other platforms, there'd be a big hole in their revenue. So something to watch, a big risk for Facebook. Earnings. So one of my favorite companies reported earnings this week, and the earnings report was incredible. So Micron is a semiconductor company. They effectively own their area of semiconductors. So semiconductor businesses, their businesses tend to be cyclical. They do well when the economy does well. The challenge is that ramping up their production capabilities to meet excess demand is so expensive that if they do it at the wrong point, or if they invest too much, it means that they will have overspent and that their margins for the next months or years are affected by the inefficient use of capital. Micron put out earnings where they're not only, the market was expecting a very, very large growth in EPS and revenue for the company. They beat those expectations and they raised their forecast for the rest of the year to incredible numbers. This is a company that has been growing like crazy and is now saying we are going to continue growing even better than all the analysts thought. And the CEO said that we think that the semiconductor shortage is going to continue through 2020. So that means large amounts of demand and to some degree a limited supply, which means that these companies have more pricing power. Despite this, the stock dropped 5 or 6% yesterday, the day after earnings. And this reflects part of the nervousness around of the market around semiconductor businesses. They are worried that maybe Micron is going to use its capital inefficiently, or that the demand for their products is going to trail off well before they're saying it will. But these are things to watch, but all evidence points in the other direction. So I added a little bit of Micron yesterday in the weakness, and I will continue to hold. I expect the stock price to be well above the $100 mark through the next probably 3-12 months. I wanted to talk about gold recently. So I don't invest heavily in gold, although I do have a few gold miners and gold miner ETFs, and these are in place in part to offset inflation fears. Now, the inflation narrative has disappeared to the background. We're not hearing it day in, day out. It's not the thing that you're seeing on the front pages above the fold for media anymore, but it hasn't gone away. So there was a massive drop in the price of gold. This was because I think this was the date where the Fed said they were going to bring forward their interest rate hikes through 2023. This scared the market. When the market gets scared, the market runs to the dollar. The dollar is a safe haven. And you can see the dollar spiked in the same time frame. And when the dollar gets more expensive, things that are priced in the dollar lose value. And this happened to a number of commodities. Some of those commodities have now rebounded. Gold seems to have found a bottom, and I expect will slowly start making its way back up. I also think that the dollar might also drop off as we make our way through the year. That scare around the interest rate hikes, that knee-jerk reaction, I think was overplayed. And we've seen that in equities, but so far we haven't seen the turn of sentiment in gold or the US dollar just yet. The final thing I wanted to talk about next week, I mentioned it already. The Monday is a holiday in the US. The 4th of July falls on Sunday, so the market will be closed on Monday. So there'll be no trading activity. Beyond that, I think we'll see the usual suspects being the things that we need to look out for, particularly the spread of the Delta variant. But also, if you look at the dates down here, you can see that we are now approaching earnings. So July 20th is when Netflix reports, Delta on the 15th, and then a number of technology players, a number of companies in our portfolio between the 20th and the end of July will be reporting. So just bear that in mind. People that are organized have been buying these things well in advance of their earnings dates. So it's a little bit risky to buy in the weeks approaching those earnings. All right, that's it for today. Have a great weekend, and I'll talk to you next week. Goodbye.